Well, it's an extraordinary day. Russian equity markets are down by 50%. Pretty extraordinary. You mentioned, Russian hard currency debt, 47s, a long bond, was quoted today down at the 50s. It was 130 last year. I mean, I think what this shows is that, global markets didn't actually see this coming, which is extraordinary. I mean, we took Biden's words late last year as a read my lips moment that conflict was coming. We believed in, we reduced exposure to Russia and Ukraine. And I'd be very slow to get back in because I think we just don't know where this is going. It depends what Putin wants. But I think what's clear from the response from European politicians, there's real shock and disgust with Putin. And I think the sanctions response is going to be really severe. And I mentioned the Russian markets. I think what's interesting is, Russians seem to have believed the Kremlin's narrative. I mean, they weren't prepared for this. So actually, Putin is crashing his own markets, which is pretty incredible. Extraordinary moves in Russian assets, I think. And again, it's remarkable that people didn't see this coming. We had all the intelligence, we had the warnings from Western governments. People just didn't believe the intelligence, which again, I find utterly extraordinary. But anyway, global impact, you've mentioned it already. I think global impact is going to be more significant than people assume. People were overly sanguine on the risk. Depends what Putin does from here. I noticed today he's talking about, legislators in Russia are talking about a regime change in Kiev. If that happens, Ukrainian assets will become untouchable because presumably they'll be subject to the same kind of sanctions that Russia is under. So Putin is going to end up having to pay for supporting, Belarus, Russia, and Ukraine if he continues what he's doing at the moment in Ukraine. So this is really bad for Russia, and bad, unfortunately, for everyone. Certainly the Ukrainians.
No, absolutely. I think we've all been diving for our history books here and our markets almanacs, and unfortunately, the message over the sort of 1 year on time frame seems to suggest that markets do come back quite quickly if these tend to be short events. Now, I don't want to recommend to anybody that today is a day where they go out and buy assets, but as you look back to things like the Pearl Harbor attack or the Vietnam War or the wars in the Middle East that the United States was involved in, subsequently over a 12 to 18 month view, we saw asset prices back to where they were and actually higher. As you look at what's happening now and you think about the macroeconomic environment that we're actually in with high inflation and central banks thinking about raising interest rates, is there any reason to believe that it will be different this time? That if this happens to be a short and protracted war, that we could see maybe markets higher in 12 months?
Look, this, again, read my lips, unfortunately, read my lips instead of Biden's. This is a globally systemic event. Putin is redrawing an iron curtain across emerging Europe. We have to totally take a fresh look at how we look at European and Western security, the role of Russian oligarchs, Russian business, Russia Inc. in Western markets.